also that is also under pressure in today's trading session. So what are the next set of levels that one should watch out for? We've surpassed the 59,000, comfortably above it, but from here where?
So, on the Sensex, 59,600 was the resistance which I highlighted yesterday as well, that this is the resistance which was created last week on that big gap up day for index, as well as a strong move of more than 1,500 points on the Sensex on that day. So I think that remains to be the first important resistance which the Sensex has to cross. And once we do that, that will be the first point of confirmation that the bulls have taken charge back again, and we could be in for a breakout on the indices, possibly over the near term beyond that. So I believe one has to wait out for that confirmation of a breakout above 59,500. That would be the point where I believe the indices, the benchmark indices, would start signaling that we are out of this consolidation and we could be possibly starting a new uptrend.
All right, so that's the view coming in on Sensex. But let's move on and let's kickstart with our query segment. As you all know it, we are live on our social media platforms, Facebook, YouTube, as well as on Twitter. As well, you can write into us on the WhatsApp number that's flashing on the top of your screen, where you can mention your name, the stock that you are asking your query on, as well as do mention the time limit that you're looking to hold a particular stock, if you want to buy it afresh or you've already bought it. So if you bought it, do mention the quantity and the price that you purchased the stock. So let's kickstart with that, with the query segment then. And the first one is coming from Rajagopalan, and Rajagopalan is saying that he's bought Coromandel International at a price of 760 rupees per share. He's saying he's happy to hold on to this counter for the next 2 to 3 years, but should he look to hold or book profits? What's your take on this one, Kunal? Coromandel International.
I think you should continue to hold on. I think it's a very steady kind of a stock, has done reasonably well on a year-to-date basis as well. Last year it may not have given you exceptional returns, but the stock is just about trying to compensate for that, up 38% so far this year. Even the a couple of years back, the stock had shown a very similar kind of a phenomena where it goes into a rally, breakout, consolidates, and then moves up higher again. And you've bought at a reasonable price. The stock is already up, I think, 40% plus from your entry price. So I don't see any reason why you should be looking to book out profits. I would suggest to hold on.
Right. Rajesh, this question's for you. Our viewers asked me to specially ask you this question. Krish has written to us from Chennai. He's holding 50 shares of Granville Norton, bought at 1,700. He's saying it's doing well, but he's asking if he should hold it for the next 5 coming years.
Yes, one can continue to hold the stock. It's one of the industry leader, I would say, in the Granville Norton company. It can go easily to 2,500, 2,600 in the near future, but for a longer period of time horizon, even higher targets are quite possible. The company is doing quite well, I would say. Quarter on quarter, the numbers are good. Margins have expanded. I think one should continue to hold the stock. And if there are any dips to maybe around 1,900, 1,950 odd rupees, that would be a good entry point for this.
This is for you, Kunal. This one is from KR Balan, and he has Kolte Patil, Brigade Enterprises, and LIC Housing Finance, where he's making about a profit of about 10%. Not sure on each of the counters, or aggregate is 10%. He now wants to know whether he should continue to hold on to all of these counters or look to switch to Adani Port, Patanjali, or IDFC First Bank instead.
So I think you're holding a good set of stocks, including Kolte Patil, etc. So I don't see any reason for you to do that change or mixture in terms of portfolio mix. But I would believe that if possible, what you can also do is you can look to add few of the other names. Now I'm not sure what's the core portfolio which you have in terms of the number of stocks, but if there is any addition which could be a possibility, then I would suggest IDFC First Bank. I think over the last many months I've been highlighting the stock consistently, and I sense that the stock is also on the verge of a turnaround for itself over the long-term basis. So IDFC First Bank is the only inclusion which I would suggest out of the lot.
Right. Back to you, Kunal. Srinath is writing to us from Kochi. He's holding 500 shares of NDTV. He's asking whether he should sell it or accumulate.
I think the stock has been in the thick of news flow. I think, if I'm not wrong, it's also been one of the few stocks which has also gone through circuit to circuit over the last, I think, 1.5 odd month, from 200 to now 500 plus. I would suggest an exit in such kind of a stock.
Okay, now this one is coming in from Vaibhav, and he wants future target for Tata Communications. He has 50 shares, purchase of 1,160 rupees per share. He wants to know whether he should wait or book profits. He's saying he can wait for 180 days, trying to trick us by playing math with us, basically 6 months, Kunal.
So yeah, I think for 6 months kind of a time frame, you can hold on to Tata Communication. But I think the real potential for these kind of stocks would not be unfolded in a very short span of time. Tata Communication, you look at the period for 17 to 19, the stock remained sideways for 2 years, 2.5 odd years around this 400 mark. And then from 400, there was a move in just a matter of 1 year where the stock catapulted from 400 to now, I think 1400 plus levels, which means that the stock has this tendency of getting into a multi-year sideways zone, trying to fluctuate between a range, but then possibly in the next 2 to 3 years, the stock covers up this zone of underperformance or consolidation and moves up significantly higher. That's the quality of such kind of stocks which have to be held from a long-term play. So I would suggest that if possibility, then you hold it for not just about 6 months, but potentially for the next 2 to 3 years as well.
Right, Rajesh, coming to you now. Akshay is writing to us from Dubai. He's holding 50 shares of CDSL at 1100. He's asking whether he should hold, exit, or add CAMs to the list.
Can add to the stock. The numbers have been quite good. Even today, the numbers that came out with a new addition in the client base is quite encouraging. Somebody looking for a longer term horizon in a BFSI space, I think this is one of the best proxy plays for the entire securities market, I would say. One can continue holding to the stock, one can even add to this. The quality is very good.
The next query that I have is coming from Neha. And Neha is saying that she's bought Indian Bank at an average price of 148 rupees per share, Kunal. She wants to know whether she should now look to book partial profits or wait for higher targets over the next 1 to 3 months.
Well, I would suggest to book out maybe partial profits over here, not to book out full profits, because the PSU banking theme and the rally which we've seen, I think I would sense that it's here to sustain. The only reason why I'm saying that book out partial profits or slightly more than that is because of the high beta nature of stock like Indian Bank. So if the stock gets into even a minor corrective phase, there is always a possibility of the stock coming back towards 170 odd before it starts to resume its uptrend. So purely in that aspect, I would suggest that it's prudent enough to book out partial profits or more.
Right, so Sheila is writing to us from Karnataka, Bellary in Karnataka. She has IEX shares at 240 and she's telling us, she's asking if she can hold it for the short term or the long term. This is for you, Kunal.
I would suggest to hold on to IEX. I think the stock is going through its one of the worst phase in terms of price trends from 225 to 50 levels. The stock is almost at 150, 160 range for the last 2 to 3 months. Even though the indicators are a bit sluggish, but I would believe that such are the kind of stocks which tends to remain under consolidation. But then whenever there is an up move, the up move is very swift and very fast. And if you happen to catch it at the fag end of the price uptake, then you're caught back again buying the stock at higher levels. So it's always prudent enough to buy and hold the stock and sit through this silent phase or a phase where the stock's consolidating. I would believe that you should hold on to IEX.
All right. This next query that I have is actually coming in from Hari. This one is for you, Rajesh, and Hari is writing to us from Abu Dhabi. And he's holding 10 shares of Shree Cement at a price of 24,800 rupees per share. And he's wondering whether it's worth holding on to for another year or so.
For a longer term horizon, it's a good company. One can hold. The company has been expanding aggressively. They have put on new plants. They acquired some grinding units also. We are very bullish on the cement pack as a whole. The last 2 quarters has been really depressing. That's not because of Shree Cement's alone performance, but the entire cement sector. The only hiccups right now is there might be some selling because of the counter coming out of the Nifty. But for a longer term horizon, we have a target of 26,000, 27,000 in the next 1 year or so. So one can continue to hold.
Right. Coming to you, Kunal. Subrata Mukherjee is written to us. He's asking, he's bought Aurobindo Pharma at 750 rupees. He's asking whether he can average at this price or shift to Divi's Labs.
You can shift to Divi's Lab, but I think a much better alternative, and specifically from a momentum play or a breakout play, would be Cipla. I think over the last 1 or 2 weeks, I've been recommending this stock because of the anticipation and expectation that the stock is ending a 12-13 month of consolidation, something which the stock had entered at the first quarter or the start of 2021. So when the time-wise correction ends for a stock like Cipla, you would potentially see a breakout, and I would believe that the breakout could be almost a 15% to 20% breakout in a span of 3 to 6 months. So if you have that kind of a time span, if you're looking out for that immediate short-term kind of a returns, I would suggest a better alternative would be Cipla.
All right. This next query that I have is coming in from Hemanta Datta, and he has Deepak Nitrite Rajesh, which is purchased at a price of 1980 rupees per share, about 20 shares of Deepak Nitrite. But he wants to know what sort of long-term target should he look to set for Deepak Nitrite, and also does it make sense for him to hold on to this particular counter?
Of course, it's a hold from our side. Not only hold, we have recommended add to this counter also. The fact remains the revenue contribution for Phenolics have gone up from around 50% 2 years back to around 68% now. Other products are doing well. Capex has already been done. The company is one of the major beneficiaries of China Plus Factor, and long-term prospects look very bright despite the fact that the stock has seen quite a lot of correction in the recent past. But for a longer-term horizon, one can safely have a target of 2,500 to 2,700 in the next 1 year.
Right, Rajesh, coming to you now. Sharik Sequeira is writing to us from Dubai. He's bought Pradeep Phosphate at the IPO price and is now trading at 60. He's asking whether he should buy 250 more shares or hold on for a year.
This is for me?
Yes.
Hello? Is this for
Rajesh,
me?
this is for you. Yes, can you hear me?
Yeah. One can continue to hold. Adding at this point of time would not be recommended, but existing stock one can continue to hold.
All right then. On that note, actually, hang in there, Kunal as well as Rajesh. We'll just slip into a break. Our director actually told Adiraj to take a break, but looks like he doesn't want to give anybody a break from the query segment. But yes, we'll slip into a break and we'll be back shortly. So viewers, don't go anywhere. And yes, experts, hang in there.
Tamil Nadu Mercantile Bank Limited.
Capital, we have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
Nikunj, you are a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout the last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better. And with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
See, Nikunj, you're a very seasoned market observer.
Welcome back to Buy Now, Sell Now on ET Now. Our query segment is still going on. Kunal, coming to you now. Thames is writing to us. He's bought HCL Tech at 1,740 and he's asking whether he should buy or sell.
1,000 shares at 740.
Yeah.
So I think the short term, the current price is 930 levels. I think you've, if you've bought at those kind of levels of 740, you're sitting on good profits. And I would also sense that these IT names, large cap IT names specifically, the likes of HCL Tech, they are going through a time-wise correction, possibly and potentially over the next 3 to 6 months, these stocks can continue to grind and remain in this tight range of consolidation. So if you are okay holding the stock for the next 2 to 3 years, I would suggest continue to hold on. But in case if you are looking to exit, then I believe that current levels of 930 to 950 could be a good level to exit HCL Tech purely from a short-term play, and then shift on to other spaces or other sectors, something like banking as well as auto is where I believe the momentum is. So you can probably try and capture those momentum from a short-term play.
Okay, this one is from Shivang Pandya and he's holding Tata Power 800 shares at a price of around 204 rupees per share. He wants to know whether he should continue holding on to it or book profits. Kunal?
I'm extremely bullish on Tata Power, and I think on many a times on the BNSN as well, I had recommended that whenever the stock hits that 200 mark or 210 range or sub 200 levels, those are classical entry points to buy the stock and hold on to it from long-term play. It's done exceptionally well from 2020 lows, and I still believe that the stock has much higher headroom on the upside potentially over the next 2 to 3 years. So a buy on dips is what I would recommend for Tata Power.
Right. Back to you, Kunal. Raj Bharat is writing to us. He's bought Hindustan Unilever, bought at 2,643. He's asking whether he should hold or sell.
See, if it's a very short-term play, I would continue to suggest to hold on to HUL, because my sense is that many of these FMCG stocks are getting into a turnaround mode. Now, there's a rally, there's a pause in between. Right now, FMCG stocks like HUL, they're going through a phase of a pause for themselves. So if you are okay holding on to it for say another 2 to 3 weeks, there is a high possibility that this consolidation would result into a breakout on the upside. So I would suggest a hold.
Right, I think we gave Rajesh a longish break than all of us had got one. So Rajesh, this one is coming your way, and this one is from Manish. He's saying that he's holding 105 shares of Patanjali Foods at the which he bought at the FPO. He's saying that his profits have doubled with that investment. So what should he do? Should he now book profits or continue to hold? And do you think there is some more upside there in this particular counter? Clearly, Dil Mange Mo, isn't it, Rajesh?
Yeah, it moved one way. It was like a very surprise move which we have witnessed in the recent past, especially in FMCG sector. But what I believe right now, the stock has a possibility of going to around 1450, 1480 or levels where I would suggest to booking profits. The numbers have been good, but with the kind of entry Reliance is trying to do in FMCG pack, I think companies like Patanjali or other peer group companies would be facing tough times and going ahead. But 1450, 1480 level would be a good levels to book profit in Patanjali. At this point of time, one can continue to hold.
Pratiksha is writing to us from Muscat, Kunal. She's holding CET Limited for 15 days and she's asking what her next resistance should be.
So for the next 15 days, I think the current levels, 1500, I think if I'm not wrong, is the 1450 is the high the stock has made today, 50-55. I think that could be a near-term top for CEAT. In fact, I would also sense that many of the momentum is shifting from the tire names. So it's not the usual MRF and Balkrishna Industries which are actually making fresh highs for themselves, but it's the likes of CEAT, JK Tires and Apollo Tires which are looking more stronger. But specifically from the pack, I think JK Tires or Apollo Tires could be much better bets from a short to medium term play. So I would suggest that if you're sitting on good profits in CEAT, book out and then maybe shift to JK Tire or Apollo Tire.
Right. This next query is from Matthew, and he's writing to us from Kochi. He's saying that he has 400 shares of IOL Chemicals purchased at 433 rupees per share. Now he wants to know whether he should hold or buy or look to average this particular counter. He's saying his time horizon is about a year or so. What's your take on this one, Kunal?
Well, I think on the short-term chart, there is nothing exciting about IOL Chemicals. It's just that the stock has gone through a very high degree of volatility. So I remember tracking the stock when it was almost at 160, 70, 3-4 years back. And from there, the stock had moved up to almost 800, 850 plus. And now it's back again towards that 370 mark for itself. So it's a very huge round of volatility on the long-term charts for IOL Chemicals. I would not suggest any major short-term play emerging into the stock price. Even in the short-term charts, it's trading below the 200-day moving average for itself. So that itself tells you the sluggishness of the stock price. So you can continue to hold on, but I would not suggest any averaging at current levels.
Right, coming to you, Rajesh. Lavish is writing to us from Indore, who's bought 1,000 shares of Triveni Turbines at 230. He's asking for a one-year view.
One can continue to hold. The kind of traction we are witnessing in sugar pack, Triveni turbine is going to be benefited out of that because of its supply turbines to sugar industry. I think one can continue holding to the stock with a target of maybe 250, 260 in the next 6 to 9 months.
Okay, this one is from Gaurav Rai, and he's saying that he's purchased Airtel at around 701 rupees per share a month ago, Kunal, and now he's saying the stock is around 750 odd levels. So he wants to know whether he should continue to hold or sell, and he has about 50 shares of Bharti Airtel.
See, I would suggest to hold on. My belief is that stocks like Bharti Airtel are a keeper in your long-term portfolio. You should generally not tinker with these kind of stocks from a short-term play, because every now and then these stocks would offer you another 5%, 10% kind of a short-term gain. But the real potential would be unleashed once these stocks are held from a 2 to 3 year or plus kind of a time horizon. That's where I believe you could probably get a higher return of maybe even 50% or higher than that for such kind of names. So I would definitely suggest to hold on to Bharti Airtel and don't look at it as a short-term play.
Kunal, coming to you now. Deepak is writing to us. He's saying he's bought Zenza Technologies, 100 shares at 517. Now he's currently trading it at rupees 230 and he's making a loss of approximately 29,000 as of today. He's suggesting a holding period that price will go beyond rupees 517.
See, I think that it will take a lot of time for the stock to make a strong comeback. My sense is that even if the IT cycle gets into a revival phase, the revival may not be as similar as what we've seen from the 2020 lows. So potentially for the next 1 to 2 years, you could be locked into the stock price at current levels. A much better alternative is if you're looking to gain back your lost capital, then it's always better to try and shift towards a performing stock or a sector. That's where I believe the chance of making higher returns and gaining maybe 40-50% over a short span of time is a high probability. So I would suggest you to make that switch.
Okay, this one is for you, Rajesh, and this one is from Aman Soni, and he's looking for a mid-cap IT counter that he can look to hold for the longer term, and also if you could by any chance advise entry levels for him, because you're already holding Infosys for the longer term in his portfolio. IT sector has been under immense pressure of late actually. Rajesh, do you think that now is the time that you can even look at it, or do you think that there is still time away to actually look to venture into mid-cap IT space?
See, IT as a pack has seen a dream run in the last 2 years, I would say, in the COVID period, where everybody was talking that IT is going to perform, and we saw stocks moving 2x, 3x, at least in the mid-cap space. Going forward, even the larger names are feeling pressure because of margins, because of attrition rates and all those things. I think the entire pack would go into the consolidation phase for the next 6 to 9 months. But in the longer term, they are going to perform well. So I would say at this point of time, it would make sense to be with larger cap names like Infosys or a Wipro or a TCS rather than going for mid cap. But still, if somebody wants to have a look at a mid cap, I would say Intellect Design would be a better pick.
Rajesh, just to add to that, a couple of our viewers also asked about Infosys. Do you think that it makes sense then now to look at Infosys?
Of course, at least if somebody is ready to wait for a period of 6 to 9 months or a year down the line, I think this is a good opportunity to enter into stocks like Infosys or TCS, because one, they are doing very well, and since they are a large cap name, the order book is better than the other names, and they come out with buybacks every year, I would say. So that again would be a trigger once that is announced. So one can accumulate the Infosys at around between 1400 to 1500 odd levels.
Right. Rajesh, Anand Chansoria is writing to us. He's holding Hdfc Bank at 1380 and 500 shares of it. He's from Jabalpur and he's asking whether he can hold it for the next 2 years. Rajesh? Rajesh, can you hear me? I think we're having some technical difficulties there, but...
Let me take over then. Let me ask this next query then. Let me take this one to you, Kunal. And this one is from Saida Rao, and Dhanuka Agritech. Holding period is for 1 year. Wants to know whether and also the purchase price is at what the current market price is of this particular counter. So Saida wants to know, does it make sense to shift to some other counter like Coromandel? We did speak about Coromandel at the start of the show though.
But I would not suggest to switch as of now. Of course, Coromandel looks to be more stronger, but Dhanuka Agri as well, I think is getting into a turnaround mode for itself. I think if I'm not wrong, for last 7 or 8 months, the stock had been going into a corrective phase, and it's the second month on a trot where the stock is now seeing a recovery. So after 7-8 months of price correction, second month where you're seeing some decent price recovery for Dhanuka Agri, which means that the stock is getting into a turnaround mode for itself. So not a good time to exit the stock and switch on to a stock like Coromandel, which has run up extremely high. You have to be patient over here and wait out for at least the next 2 to 3 months. I believe the stock should come back towards 800, 850.
Right. Rajesh, I hope you can hear me now. I'm asking the same question again. Anand Chansoria has written to us, who's holding Hdfc Bank at 1380 and 500 shares of it. He's asking whether he can hold it for the next 2 years. Your views?
Of course, one can hold it for the next 2 years if one has the time horizon. It's not performing off late because of the merger that has been announced, and we have seen whenever the merger is announced for any company, it goes into a long phase of consolidation because of various reasons. But as far as performance is concerned, it's doing very well, 20% consistent performance. They have shown in the recent past, they are adding good number of branches, and after the merger, the size would be very big. I think one should definitely take this as an opportunity for buying if somebody is a long-term investor looking for 2 years, 3 years horizon.
With that, let's kickstart with the rapid fire then. And first one is for you, Rajesh. This one is coming from M. Chandrasekharan from Coimbatore. All cargo purchased at 356 for the longer term, but the counter is making loss. Should he continue to hold or exit, Rajesh?
I think one should exit and move to some other counters, maybe a Gati or a Concor would be a better buy.
Kunal, Anjali from Nasik is listening to you. Firstly, thanking you that she said she bought NTPC 2 years ago at 82 and now she's asking for Ashok Leyland at 84. Can she book now?
Well, I would suggest to hold on.
Okay, Abhishek Mehta wants to know whether it's good time to accumulate Britannia at current levels or should wait long-term perspective, Rajesh?
One can add.
Okay, Hasmukh Patel is writing from Toronto, Canada. He's asking on a query for Bajaj Finserv and asking what a good time will be to buy. Kunal?
Well, I think any time is a good time to buy these Bajaj twins, whether it's Finserv or Finance.
Okay, Parth has 50 shares, Ambuja Cement, 320 rupees per share. In light of the Adani takeover, should he book profits or hold for the long term? What's your take on this one, Rajesh?
It's a ad. It's a ad. I would say forget about takeover and all or a buyback price, ad.
Right, Raju's writing for us from Telangana. He's asking whether it's the right time to freshly buy Indian Hotels, Tata Motors and Hdfc for long term of 5 years. Kunal?
Well, not sure for Indian Hotels at current price, but then yes, for Tata Motors as well as HDFC, I think it's a good time to buy.
Okay, Rajesh Maheshwari is asking this question for you, Rajesh. He wants, out of the two stocks, Alkyl Amines, Balaji Amines, which one should he look to buy for the longer term?
Balaji Amines. Alkyl Amines is also good, but at this point of time, valuation is in favor of Balaji.
Right. Aarti is writing to us and she's asking whether she should buy between Escorts, NTPC and Aprotech. Which one should she buy? Kunal?
I would go for NTPC any day.
Okay, Brijesh is the student and he's asking about Prince Pipe 640 is the buy price, 30 shares, exit or wait. Kunal?
I would suggest to hold on.
Alright, and with that we come to the end of the rapid fire as well as the query segment. Thank you so much Kunal as well as Rajesh for joining us on this show, taking our viewers through all the stocks through their queries as well as sharing your views on the BNSN lens on the refiners. But on that note, we'll slip into a break on this edition of Buy Now Sell Now, and we will be back tomorrow, viewers, so don't be too perturbed if we've not taken your query today. We will definitely try and accommodate them tomorrow. But for now, a break on Buy Now Sell Now.
Over, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think